Hi, good evening, everyone. So nice to meet you all here. So I'll be sharing how to perform a basic technical analysis today. So, so just I just make an introduction, brief introduction about myself. My name is Ming. I'm actually a full-time trader for the past 7 years. And what do I trade is crypto market, forex market, and also stock market. I also use automated trading strategies such as grid trading strategies to trade the market. So I combine with different type of strategies, either short term, mid terms, or long term, to get a really considerable, considerable, profitable strategies in the market. So today I will be sharing about how to become a how to perform a technical analysis. Okay, so how to become how to perform a good technical analysis. So we as a trader, we actually use technical analysis to make an entry. So we find a good timing or a good price to enter the market. And today I will be sharing about how do we start to do our technical analysis. First, we will look at the chart. So the most famous chart we use is Japanese candlestick chart. So what is Japanese candlestick? So Japanese candlestick actually is a, a candlestick that we used to be see in the chart. So there is an opening share price, and also for the bear candle, there will be the opening share price at the top. And then for the green candles, for I think in Singapore market, we usually use green candles as a bullish candles and also red candles as a bear candles. So if the otherwise, I think on the Hong Kong or China, because they use green as a bearish candle and then green for red as bullish and green for bearish. So today I will just stick with Southeast Asia candles. So we usually use green as bullish candle. So for a bullish candle, there will be an opening and closing. So you can see the candles. How do we read it? We look at the opening price. Usually, with the bull candles, usually the opening price is at the below of the solid candle. So the closing will be the top of the solid candle. And then for the upper shadows and the lower shadows, actually the day or the specific time frame the price had go through. So it means that the bottom one is the opening share price. Let's say it's 10, then it can close at 12, and then in this particular time frame, it goes up to 13, and then it also went down to maybe 8, and then it formed this candle. So it's the same for the red candlestick, which is bearish candle. It's the opening share price, and then there's a closing share price. So let's say this is a daily candle. It opens share price at the top, usually open at the market. Let's say this is 10, then it closed at 8. Then on that specific time frame, let's say it is daily time frame, it went up to like maybe 14, 15, either more than 10, and then it went below like maybe 7 or 5, then it closed at a solid candle. So this is how a Japanese candlestick, how do we read a Japanese candlestick? So this is the basics of how do we read a Japanese candlestick in a chart when we do technical analysis. All right. So usually when we want to trade a stock, so we want to know what is the trend, what is the market trend. So how do we determine the market trend? So for market trend, actually there is only 3 market trends in market. So what is the trend? Either it's uptrend, sideways, or downtrend. What is uptrend? Uptrend is when you buy a stock, the stock's price will slowly goes up over the time. However, when the market trend is on sideways, you usually face some stagnant fluctuations in stock price, like maybe it's stagnant between certain prices. It's like one is like trending maybe between $1 to $3 up and down in the long time frame. All right. So for downtrend, I think most of the people, you don't want to trade a downtrend stock. Why? Because the probability for you to get profit in the market is become very low. Why? Because the market is slowly trending down. When a market is slowly trending down, we tend to lose over the time, right? Because the price is dropping. And when we buy, we will get trapped at a high price. When we thought it's low enough, then we buy in, then it get lower, then we get in again, then it went lower again. So we don't want to trade this type of trend, and we also don't want to invest in this type of trend. All right. So it's very important to look at the market trend. We only want to trade a uptrend because uptrend will let you to get profit very easy. I mean, easier than other trend market. So it's very important we look at the trend when we do technical analysis, because this is the most important factor for you to earn the profit, to earn the price difference. When we trade, we want to trade like maybe $1 to $2, right? We want it to go up. When it went up, like our target is 1, and when we trade, we entry at 1, and our target is 2. Then it keep move like between 1 to 1.5, then drop 1 to 1.3, then goes up to 1.6, then goes down to 1 again. Then this is sideways market. We don't want to trade this kind of sideways market. However, there's also a strategy we call scalping to trade this type of market with a small movement. However, for scalping strategies, there is only low risk reward. So we don't want to do a trade that has low risk reward, low risk reward trade. So for downtrends, we want to avoid it. We want to avoid it at all costs. So we don't want to trade this kind of market. All right. So these are the examples of how do we determine uptrend, sideways trend, or downtrend. So as you can see, for uptrend, you can see the high will become higher, and the low will become high, higher low, and higher low. So the high will become higher high. The high will keep on getting higher, and then the low will keep on getting higher. So we can see the price will move in a price will not move one way up. It only will move like breathing. Breathe out, breathe in, breathe out, breathe in, breathe out. But in uptrend, over the time, the price will increasing, slowly increasing. So we want to long a uptrend stock. So next, on the opposite, let us talk about downtrend. So for downtrend, it's the opposite of the uptrend. So the high will getting lower. So the high will, you'll get a lower high and then another lower high. For the low, it will keep on getting lower low, lower low, and lower low. So by connecting all these lower highs, by connecting all these high and all these low, we will likely know the trend of the market. All right. So we will determine we will plot a trend line in this market, in these stock prices. So we plot the high and we plot the low. So I will show you the examples in the coming slide. So no worries. And let us continue. Then for the sideways trend, is as the name, as what the name says, sideways. The prices goes nowhere. All right, because it went out, went down, went out, went down, went out, went down. It's like consolidating in a certain range. So this type of market is very hard to trade unless you just invest in it. So in uptrend, what do? Is we long the market. So for those who can't use CFD, we can use option trading to long the market. However, on the opposite, for downtrend, we can use put options to short the market. All right. So how do we short the market? So I think in Hong Kong, I think short selling is not legal. I mean it's not. I think it's not able to give short selling. So we can use option trading to open a put option to buy a put option, and then we can benefit from the downtrend. When the price drops, we can open a put option to earn profit from that. So for those who don't know what is option trading, you all can look at my other video or maybe look at the Usmart weekly trading class. There is plenty of option class available, free class available here. All right. So we understand that the market have three types of trends, and it is very important for us to identify the trend for us to become profitable in market. So this is the first step on how you perform technical analysis. So in this example, we can see that we can draw a line at the high of the stock prices and the low of the stock prices. When we drew the line, it will form what we call a trend line. So as you can see, when it's on downtrend, you can see the high is getting lower and lower and lower. So it forms a lower high, right? However, when we connect when the low becomes higher and we draw the trend line, it becomes an uptrend line. So this is how we got the trend movement of the market. All right. So this is the basic one. First, we always need to know what is the current trend. And the trend can be different in different type of time frames. However, in this topic, since it is for beginners, I won't go in depth in the time frame analysis yet. So we just learn what is trend line. Remember, trend is your friend. You always want to trade according to the trend. We don't want to trade, we don't want to counter trend. When the market is very bullish, it will go high and high and high. We don't want to go every high, we want to short sell it. We want we want to follow the trend and then we guide through all the trends. Okay, so this is how you know the trend, the market trend. Sideways, bullish trend, uptrend, bearish trend, downtrend. And here, as you can see, when the higher high, when the lower high turns into higher high, we can know that the market trend is starting to change. That's the probability of the trend is changing. And then next we look at the low had become higher low or not. So when this happens, we know the trend is potentially changing. Remember why I said potentially. It is because in technical analysis, it's still a probability game. So we use all this kind of trading analysis, technical analysis to increase our edge. So nothing is 100% right in life also. So we want to have a high probability trade. So this is how we learn technical analysis. All right. So as you can see, this is a summary of what I mentioned, the trend. This is how you plot the trend line. When the high getting high and the low getting high is uptrend. When the downtrend, the high is getting lower and the low is getting lower. It's very easy, right? Just look at the trend. So mostly, if you want to look at the trend, you don't go to the small time frame, like 1 hour, 4 hours. We mainly look at the high time frame daily chart. So you all can start practicing it by looking daily chart, and then you draw the trend line, and then you all study and always do back test. Because when we study a theory, this theory is just a theory. We need to apply in the market, and then we do a lot of study. Then we'll begin to understand more about market. So don't simply jump in the market without doing any homework, any analysis, either fundamental or either technical analysis. Remember, technical analysis is just a tool for you to make a good entry. Sometimes you look at a stock is very good, but maybe it's overvalued, or maybe you don't know how to enter, find a good entry point. So we can use technical analysis. So for support and resistance, next we will talk about support and resistance. So after the market trend, we look at the support and resistance. Support and resistance is a very famous technical analysis tools we use, information we use. So what is support and resistance? So when the market move, when it retraces, usually it will, when it hits certain prices, it will stop dropping. Then it will kind of form a support there, prevent the market from collapsing. Then when it hits the support, it will bounce up. Then it will bounce until it hits resistance. Resistance is a place where many areas, when you hit a wall, the stock prices, when it comes there, it always cannot go pass through, and then it drop back again, and then reject from the resistance area. So this is why we call resistance area. However, if the stock prices move past the resistance area, so we can say that it is a breakout. When it breaks out from the resistance area, there is possibility that it will become the resistance will become a support, and it will trend towards the next resistance, where the price will hit a resistance many times when the stock hits a certain price. So how do we draw a support resistance? So as you can see in this circle, we can see that when previously when the stock price hit this area, it will drop, and then when it hits again, it will drop. So we can plot, we can connect it, we can draw an area. So supply and resistance actually is just an area. It's not a just single price. It's an area prices. So it will go up, go down, go up, and go down at the resistance. Then it breaks out. It breaks out. There's a possibility that it becomes a support because it's breakthrough, and then this resistance becomes support. Then we buy it at the breakout, and then our target will be the next resistance. However, there's also another strategy that we wait, it breaks out, and then come back to test the previous resistance and confirm it when we confirm it become a support, then we buy and we try to ride it through another resistance. So there's a lot of technical analysis strategy out there. I just share the simple one, and maybe we can slowly understand how the strategy works, and then everyone's view on trading strategy is different. So it's also like maybe somebody likes a fast movement, somebody likes a long movement, and it really depends on your preference. So other than we need to analyze the trend, we need to know where is the support and resistance. So we try to buy at the support and sell at the resistance. So here you can see after the breakout, after the second time breaks out, it went to another resistance and then dropped all the way down back to the previous breakout resistance. And then it formed a bullish candle. And then bullish candles means there is a buyer. So when it hits the prices there's a lot of buyers, and then it forms a bullish candle, strong bullish candle. Then we can say that there's a potential bullish signal. Then plus it is at the support, previous strong resistance becomes support. So we can try to buy in there. All right. So here you can see when the price hits the area, it will form a resistance. And then can you see another resistance breakout and maybe tested? So here you also can see there's a downtrend, short-term downtrend line. So there's also a uptrend line. So for the right side, you can see that the market price is breaking out the area of resistance. Then it will test back, and then confluence with the uptrend line. So from there, we can see that it can be a potential bullish signal. You see this breakout and retest, plus it hit the trend line. So there is confluence. What is confluence? Means there's like a checklist in trading analysis. When we want to enter, we need to have certain type of criteria. And then here we can see that there is a trend line as a support, and also the resistance becomes support. So here can be a potential bullish signal. Understand? If you all have any questions, you all can let me know. I will try to answer one by one. Because for starter, technical analysis can be a lot of information, but in the end, we will pick a easy one, a simple one for us in order to not get confused in the market. But first, I still have to go through all the basic technical analysis theory for you all. So please bear with me. So next, another example of support resistance is this stock is called Qualcomm. So you can see that it's actually form a high and a low. And you can see the low actually forms a certain area of support. So this is how we plot the area of support. You can see that the price is potentially falling back into the area of support. So what we must do is we need to wait. We don't want to directly buy the stocks when it is at the support area. Why? Because it can go through broke the support and then go down all the way. We want to wait it drop and then maybe slow down, the selling price slow down and then form a bullish candle or certain signal. Then we only enter because there is called that's confirmation. We don't just wait that we don't just plot the support and resistance and then we buy and sell at the support and resistance, because support and resistance is just a reference. Remember, in technical analysis, it's not 100% thing. It's a probability game. So we want to wait the price come to us, see how it reacts, and then when there's confirmation, like bullish signal, then we only do an entry. And then boom, we can be lost and we can be win. So we need to do risk management. But this is another class. So for support and resistance, we can plot at the high, at the low of the stock price, and actually there's also a smaller time frame support and resistance. So from here, you can see that there's a smaller support and resistance in between the prices. So it will form like certain types of like N drop, it drops, rebound, and then drops again to break through. And then you can see that when the market hits this area of resistance, it rejects and the price fall down. So we can plot it as it is a potential resistance for us to target or monitor in the coming futures price action. So the top here, you can also see that there is also a support. We can say a rally weak support because there is not much price tested there, but it's still a support or resistance. The support can either become support or resistance. When the resistance is breaking through and the market price fall back, it can become a support. Resistance might become a support, but as I said, we need to wait for the confirmation for it to become a support. Because when it drops down, it can directly just break through the previous resistance. So we want to wait for more confirmation. In trading, most of the time, what we need is patience. We need to wait the price fall to our area of interest. And then it forms certain types of confirmation, then we only do the entry. We don't want to chase the market. We let the market chase us. And this is the hardest. Trading is the easiest way to earn hardest money. What you need is just 80% of patience. So these are my rules. So I will just wait for the criteria to be picked, and then when the price fall down, make a certain risk confirmation, then I only enter. So we don't simply enter the market all around. We don't chase the price. We always wait for the market to retrace and then enter. In the uptrend, the market will move up, move down, move up, move down. Then when it moves down, then if it forms a support, then we only enter. Remember that. So first we look at the market trend. Next we look at the support and resistance. So this is how we plot support and resistance. Okay, so another example. I bet you all know what stock is this. This is called Grab. It's just like a Uber. So it's very famous in Southeast Asia and it's a super app giant tech. However, this stock had been consolidating, I think for almost 3 years, from 2022, I mean 2 to 3 years. So recently it just breaks out from the ranging area. So this is what we say, this is sideways, and then suddenly the range breaks out. As sideways can be a long-term support. So it breaks out, this potentially it will trend towards next resistance. So what will be our next target? Potentially here, yeah, because you can see there's a previous support area there. And then the highest is the strongest resistance because the highest will always be the resistance. And there's also another immediate target is around this area. So this is weekly chart. So this is a long time frame invest, or maybe we can say this is swing trader, but I think 2 to 3 years is more or less is called invest. So when we invest this stock, we want to target a certain area to sell. It's pointless if we just keep buying the stock forever without take profit. As for me, we need to take profit, and then for the very long term invest, we just leave it. But in trading or investing, we always need to know how to take profit. Many people know how to buy a stock, but how to exit is very important too. And it is not easy to take profit because you always still regret in the market. You regret you buy too little. You regret you buy too much. You regret you sell too early. You regret you sell too late. So what we want in the market is we want to earn money, right? We can't predict the market. If not, we all becomes a millionaire or billionaire by learning technical analysis. So it's very important to know which area of CP take profit area you need to know. We always want to take the profit, be comfortable with, and then our capitals will slowly increasing, and then we've got the cushions of money. Then our next investment, we got a less psychology pressure. Remember that capital is also a main factor on how you decide to enter the market. You want how your psychology, like if you got a lot of capitals and then with 1% maybe it's 10,000 grand, you will be very steady. I think you won't be FOMO around like chasing here, chasing there, because your 1% makes a lot already. However, if you only got 1,000 or maybe 100, your 1% makes nothing. So you tend to go all in. When you go all in, you will lose everything. This is just like gamble. When your capital is small and then you don't have a good risk management, in the end you will wipe all your capital. So by using the simple support and resistance technical analysis, we can know that where the market is heading. From here, if for the very long term invest, I will at least look at the middle point, which is 10 to 11. But this is not a buy call, this is personal preference because it takes a long time in accumulation stage. It means in this area, many people already set up and already sell out everything, and then now the fresh money is starting to pour in, and people will eventually chase it back again. But usually the early movement is by the stock or maybe institutions investors. However, this is just a technical analysis, and then we look at the price action to make a decision whether to entry or not. You need to formulate a plan by using technical analysis. All right. So next, I will be talk about the chart pattern. So here we can see that there's a double top. So what is double top? So double top is actually a chart pattern when it forms a double equal high top, or maybe almost near equal high top, and then it forms a kind of a strong resistance. Then when it breaks the support, then we make an entry. So this red one is the resistance, and then the bottom one is the support. Then that one, the left one is for short, and the right one is for long. So when it breaks the support with short, when we break a resistance, we long it. So we need to recognize this chart pattern. So some people also use this head and shoulders pattern, and this is how we do an entry. Because head and shoulders, we can also see there is a resistance, and then there is also support, and then when we break out of the support or resistance, we make an entry. So our cutoff will be below the support or resistance. So it's not that hard, right? But we need to keep on learning, slowly keep on study, and then we need to look at the market. Then we look at the stock prices chart. Then we need to practice to recognize the pattern. We need to draw, we need to back test. Then only we familiar and have more confidence in doing technical analysis. So the famous one that I say is break and retest. So maybe all this chart pattern is very confusing. My advice for new starters, you all can consider to pick one chart pattern that you all maybe easy to understand. Then you all keep practice it. You all look at the different type of price chart. You all look back. You all back test, or you try to draw, and then you all in the end you all will come up with the conclusions that how to enter based on this chart pattern. So we can see that there's a strong resistance there. When the market breaks out, we need to wait for back to the previous resistance, and when it forms a certain bullish confirmation, then it's at the same time it's at the support area, then we can try to make an entry, and the cutoff is below, around slightly above or below previous resistance, and then we target maybe risk reward 1 to 1 or 1 to 2. So it's the same for the otherwise, which is a short. By doing a short, there's a support that it breaks, then we break, it goes back to the previous support area. Why we need to wait for it to retest? It's because sometimes fake breakout can happen. What is fake breakout? Fake breakout is when the price break through a support or break through resistance, then we think it will go, like if break through the support, it will go slower, then suddenly it reverses all the way up. So if fake breakout can be very dangerous if you trade, because the winning rate is very low if you trade breakout. So it's better we wait for the price to go up or break support, goes below, and then we test it back, and then it will only make your entry. Okay, so there is a lot of confirmation. So in today's sharing sessions, I will just introduce you all a basic one. So in futures, I will slowly share a more advanced strategy. So you all just take as a theory lesson and then slowly understand it. And maybe you all have time, you all go back, look at the chart, and then practice yourself. So another one is range breakout. What is the range breakout? Like I mentioned just now in the graph chart, it will consolidate either in consolidating like downtrend consolidating, and then when it breaks out, you can make an entry and stop loss. When the range breakout, the price is sideways at a certain area, like maybe $1 to $3, and then suddenly it breaks out to 3.5, then you can consider to enter the market. Usually the range breakout took months, weeks to months. Then the range, you can say the range is a range breakout. For those maybe 1 to 3 days, it's not considered a range breakout because we still can trade like that, but the higher time frame, the better the quality of the trade setup. Okay. So this is the short one. For short, when you want to short the market, when the market drops, you make profit. You also can look at this chart pattern. You break out of the range, and then you enter. Okay. So what we learned here today is, I think quite famous retail chart pattern. Why I said retail chart pattern is because many retailers like to use this type of trading strategy, technical analysis, chart pattern trading analysis. However, this is actually just my introduction for you all. In future, I will share about you all what is institutional chart pattern. It kind of counter this retail strategy. Because remember, in market, there is retailers and also there is a smart money or institution trader. So institutional trader are likely outsmart those retail traders. But this is for more advanced stuff. So we still need to learn the basic one and just follow me closely maybe. And then in future, you all can maybe I will share and we all can discuss more in depth about this institutional investor trading strategy. So we have discussed about trend, support and resistance, and chart pattern. Next, we will talk about technical tools. So here we can see that we can use moving average strategy. So for those who don't know what is moving average, actually it represents in this different type of trend. So here I use exponential moving average 20. So first, I will explain what is moving average. Moving average is the average closing stock prices for the maybe 20 is for past 20 days. So the closing price of the stock price for the past 20 years add up and divided by 20. So you get the average. If the average is getting higher, it means that in the past 20 days, the stock prices is moving up because the candle is above the line. All right. So usually we will look at exponential moving average is more sensitive than normal moving average. So for EMA 50, we use for the average price of past 50 days. It means if you want to do a midterm trading or midterm invest, whatever, you use a longer time frame one. So we follow another longer term, we can also use EMA 100, and we also can use for the very, very long term, we can use EMA 200. So if EMA 20 is above 50 and then 50 is above 100 and 100 is above 200, you can see that overall this stock is on uptrend because it's above the moving average. Past 20 days average is high, past 50 days average is high, past 100 average is high, and past 200 average stock price is also high. So this is how we determine the trend using moving average. We want the EMA 20 is above 50, 50 above 100, and 100 is above 200. So if the 20 started to slope down to become below EMA 50, then we need to know that the past 20 days price, stock price is starting to sloping down. Then when it crosses 50, then short-term corrections might happen. It indicates that potential short-term corrections already. So here we can see that the EMA 20 is crossing up EMA 50. Means that the recent stock price is momentum is getting stronger because the average of 30 days is higher than the average of 50 days. So we can long the stock at that point. It is a possible entry. All right. So this is how we use moving average. Here we use another technical tool called relative strength index. So we can see that when it is dropped below 30, we can say that it's oversold. And then combined with this, and then when it goes beyond 70, we can say that it is overbought. But in this case, we want to buy. So we want to buy at the oversold area. And then combined with this EMA 150 line, I just use EMA 150 to look at the big trend. Then combined with this relative strength index, and we can find a good entry when we hit. So this is what we combine those technical analysis factors, and then we make an entry. All right. So until here, did you all have any questions? So now just now we talk about market trends. Then we talk about support and resistance. Next we talk about chart pattern. Then now we talk about technical tools, which is moving average and also relative strength index. As you all can see, you all can combine all these different types of technical information in the chart, and it really depends on your preference. Then you formulate one of your own entry strategy, and then you are good to go. But still, you need to always do a back testing of your trading strategy, so you know your win rate, you know your overall statistics in beating the market. All right. So after basic introductions about the technical analysis, one of the factors we do entry in the market is we also use volume. So what is volume? So when the volume is increasing, when the stock price volume is increasing, means many people buy and sell, and the price increase, it means that the buying momentum is increasing. Because when many people chasing the stock, the price went up, right? It's a good one. So it's a bullish scenario. So if the volume price goes up and then the price goes down, what it means by that? Many people go in, however the price keep drop. It's because the shark is selling, insiders is selling, or any maybe big investors is selling. So the volume is very big and the price went down. So when you look at this sign, actually it's not a good entry point, because unless you short the market, you are doing a shorting strategy. So in this case, when the volume is increasing, the price becomes bearish. All right. So for the volume, when the volume is decreasing, so when the volume is decreasing, the price is decreased too. It means that the buying pressure is diminishing. So here we cannot say that it's either bullish or bearish. We just indicate that the buying pressure is diminished. So lack of interest in buying. All right. Then when the volume is decreasing and the price is increasing, the selling pressure is diminished. All right. So when the volume is decreased and then the price is going up, it means not much people is selling. So we cannot determine that this is either bearish or bullish, but we know that we need to monitor because the selling is getting slower. That is potential that another buying pressure will come. But there is also a possibility that maybe after a few days, another strong selling pressure kicks in. So by looking at this volume, we can decide when to enter. All right, we can get an idea where will the stock price go by using this technical analysis. So lastly, I will talk about the market structure. Okay, I repeat again. Just now I shared about trend line, market trend, chart pattern, support and resistance, then volume, indicators, MA and relative strength index. So next, I will talk about the overall macro view of stock. I think those are not only stock, it actually happen in forex, crypto, and many finance products. So in market, there are always these four things keep on repeat in different type of time frame. One is accumulation, another one is markup, then another one is distribution. Then lastly, it is markdown. So what it means by that? Here, I will let it call it is AMDM. Accumulation, markup, distribution, and markdown. So usually, market behaviors or market cycles follow this AMDM. So this is the peak of how a stock normally moves in a big cycle. Let's say this is potentially this NVIDIA. So when NVIDIA is very cheap, usually not much people will notice this stock. So you can see at the sell phase, take off phase, the NVIDIA started to go up. This is not a micro, it's just a case study, right? I just made a disclaimer here. I'm talking about potentially, this is a NVIDIA chart in the making. I can be wrong. I just give an example. So how the price went through until today's stage. So it takes off. Usually when the NVIDIA is very cheap, nobody will look at it. Then suddenly it started to take off. And then people will say, oh, okay, this stock is good. It went up maybe 100% or 50%. Then suddenly it sell off. Then no people will look at it and maybe they all will say, oh, this is a bear trap. This is not a good company. And then after maybe certain long period, it started to go up. And then whenever we know the stock, the price always like maybe halfway from or up a lot from the bottom already. Do you all notice that? When you all notice a famous stock, usually when you look at the chart, it already trending up a lot from bottom. So this is how the market move from sell phase to media attention, then to public. Then usually when you enter there, the price will become very volatile, and then you don't know it can go higher or you don't know it can go lower. You just if you follow this trend, you'll just become a very confusing trader because people will say, oh, it's up a lot. It can have a big drop anytime. However, as the time goes, it can go even further. Greed, delusion, and new paradigm. And people will say, oh, it can go to the moon, like Bitcoin will go to the moon. Then, when it suddenly, from here you can see the bottom one is accumulation phase, then slowly markup phase, and then distribution phase. Why we call it distribution phase? It's because the smart money or investor or early investor or early big shark, they already bought at low. Then they need to take profit, right? Usually they take profit is by selling high and earn big profit to buyers. They are sellers. They need to sell their stock at high to somewhere else. Because in stock market, it is a zero sum game. You win from people lose. The money is there, always there, circulating. It depends on how you earn from this market. So when you got the first sum, you trade. Many people say that it's a chance to buy. Then you buy, and actually the trend started to become downtrend. Then those who chase high will convince themselves that okay, this is just a big correction. In futures, it went up to the moon. Then it slowly drop until capitulation happens. What is capitulation? Capitulation usually happens at the near end to the end of the downtrend phase. And it drops a lot, then it suddenly have a big huge selling off. Like maybe in one day it can drop up to 50 to 60%, and then all market is doomed, all this kind of sounds will come up. And then the stock will hit this is called blow off phase. The maximum fear is there, and then when people say the stock is dead or maybe the market is dead, then the price starting slowly move up back, and then usually it stays at the low for a long period of time until everyone is sell out their stock, or maybe like Bitcoin last time the correction happened like that. Then the market, the good quality stock, then suddenly it takes a long time and then it turns up again. So this is usually a market behavior. And why I share this to say is because we at least need to know a macro view on what is the environment of current market now. I wouldn't say that we are in certain kind of stage, but we can look at this chart and take it as reference. All right, I think today this is my sharing today about how to perform a technical analysis, and hopefully we can become a profitable trader in future. So this series is how to become a profitable trader, and I hope that you all learn something. And if there's anything you all can consider to use to add me and my recall, or use my if you all don't have any Usmart app, you all can consider use my referral codes. For the left side is Hong Kong app, and then for the right side is Usmart SG app, Singapore app. So feel free to contact me if you all feel that you all learn something from me, and I can get more motivations to share more with you all in future. And thanks for support me today. I'm sorry if there's some technical issues, but in futures I will try to like share more about how do we trade and how do we perform a good trading strategies, and how do we outperform strategies. Like there's a lot of strategies I can share, but yeah, we still need to go through the basic one and then slowly to the advanced one. And thanks for coming here today, and looking forward for next session, and have a nice day. If you got any questions, just let me know. I actually opened a Telegram group, but so far I'm not much member. You all can consider to add me and get to know me there. All right. So, isn't it? So I will end my session with this disclaimer. And have a nice day, everyone. Hope you all have a great day and learn something new today. See you all soon.